Hey, hi everyone. Welcome to another video. And today we are going to discuss about hedge funds, and this is a part of our hedge fund series. So we have covered different strategies of hedge funds, like global macro strategy and contra strategy and quant strategies. We have covered details about Ed Thorpe on a few of the investment strategies that he has, quantitative strategies he has developed, and the books he has written. We have also covered about Newport Princeton partners, as a part of our hedge fund series. So today, what we will cover is, what is the fee structure of all the major hedge funds in US, UK, and India. So that's what we're going to cover today: the fee structure of the hedge funds in US, UK, and India. So the normal free fee structure for hedge funds is 2% and 220. That is the normal thumb rule. 2% of the assets under management. That's the annual management fee has to be paid, and 20% is the performance fees. The profits generated, 20% has to be paid. So that's what we're going to discuss. So let's go into details how the fee structure of major hedge funds is there in US, UK, and India. So coming to United States, management fees is traditionally 2% of 2% annual management fee, and however, the recent trends indicate a decrease of management fee to 1.39%. Okay, performance fees is 20%, as I told you. 220 is the normal thumb rule. So, but recently this has declined to 16.17%, and with new funds launched in 2022, averaging 18.5%. Okay. And hurdle rates. So hurdle rate is, some funds implement a hurdle rate, so requiring returns to exceed a specific benchmark before performance fees apply. So, like for example, in Indian case, Nifty index, whatever it is giving returns, that could be a hurdle rate, or in the case of US Nasdaq or S&P 500 or Dow Jones index returns, could be a hurdle rate. So basically that fund will implement a hurdle rate, and anything that above that specific benchmark, for that only the performance fees will apply. Okay, and the other one is high watermarks. So the high watermarks is, the managers will only get performance fees on new profits generated, not on recovering past losses. So if the fund has performed, and suppose, it went up like this, and this is 0 to 100, and you have, suppose 50 is the benchmark, and 50, for that you collected the performance fees, but now your fund has come down again to 20, and then it again went to 100. So this high watermark 100 is marked here. Okay, so you won't get money, to again recover it from 20 to 100 again, but you will get money once you take it from 100 to 200. So for this, again you will get a performance fee. So that's what a high watermark is. That is one of the ways, the performance fees is charged: hurdle rates and high watermarks. So the hedge fund managers will only earn performance fees on new profits, not on recovering past losses. So notable examples on this management fees is Pershing Square USA, which is founded by Bill Ackman. Bill Ackman is a hedge fund manager from Harvard Business School, and he introduced a fund called Pershing Square USA, and with no performance fees actually, and only 2% management fee. And this 2% management fee also is waived for the first year. Okay, so that is a, something deviant from the traditional thing. Okay, coming to UK, the management fees of a hedge fund is typically between 1 and 2% annually, and funds with equity fund charges 1% management fee without any performance fees. So there's no performance fees also in some hedge funds. While many traditional UK funds maintain 20% performance fees, some have reduced or eliminated it to attract investors. Innovative structures in UK are GSA Capital launched a trend following fund with 0.5% management fee and no performance fee, deviating from the standard 220 model. In India, management fees is again 2% annually. Performance fees is between 10 to 20% of the profits. Regulatory frameworks in India categorize hedge fund as a category 3 alternative investment fund, requiring a minimum investment of 1 crore per investor and a minimum corpus of 20 crore for the fund. But yeah, you get a lot of flexibility in terms of operation. You could trade in, you could do short trading, you could do long equities trading, you could do derivatives, futures trading, everything you could do, and very minimal supervision is there. And you can even trade international markets. But yeah, this is the framework. It is categorized as a category 3 alternative investment fund with a minimum investment of 1 crore per investor and minimum corpus of 20 crore for the fund. In India, also hurdle rates are put, like if Nifty is suppose growing at 10% per year or 15% per year, you'll get performance fees if you make more than 15% per year. Or if mutual funds are generating 12%, if you're generating 40%, you'll get on the difference between 12 and 40%. Okay, so that is it, guys. So that's the management fees for hedge funds. So 220 is this traditional model, but there are some deviations. Like sometimes they waive off the performance fees to attract the investors. Sometimes they reduce the even annual fee to attract the investors. And yeah, we have covered both the US, UK, and India fee structures for the hedge funds. That's it for today, guys. Thanks, everyone. Have a nice day. Bye.